Welcome back, my friends. Today, we are hearing news that the value of the Solana cryptocurrency token has collapsed yet again. Just in case you are counting, Solana has lost over $50 billion in value since the beginning of 2022. 2022 has been a disastrous year for cryptocurrencies in general and Solana in particular. Proponents of Solana argue that Solana is now more critical than ever. That is because Solana is a decentralized finance platform. But, the recent collapse in the value of the Solana token suggests otherwise. Investors continue to be skeptical about the Solana token. And, this is even after the broader crypto markets have somewhat stabilized. Solana was designed as an efficient platform focused on speed. It uses an innovative consensus mechanism to differentiate itself from Ethereum. But developers have slowly been abandoning Solana as 2022 has progressed. Solana is not the only cryptocurrency horror story of 2022. As many of you may have heard by now, cryptocurrency exchange FTX filed for bankruptcy protection on November 11th. Since then, the entire crypto world has been reeling. Many other cryptocurrency companies are teetering on the brink of bankruptcy. The meltdown in the cryptocurrency ecosphere shows no signs of slowing. But, where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And, what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Solana was once touted as the cryptocurrency that would challenge Ethereum. With an eco-friendlier approach, faster transaction speeds, and more consistent costs. Sadly, investors who made that bet had a miserable year. The market capitalization of the Solana token has collapsed from over $55 billion in January. It is now worth barely $3 billion. One of Solana's biggest problems was its close relationship to FTX founder Sam Bankman-Fried. As you probably know, Sam Bankman-Fried faces 8 criminal fraud charges. After his crypto exchange, FTX, declared bankruptcy on November 11th. Sam Bankman-Fried was one of Solana's most public boosters. He touted the advantages of the blockchain technology. And he invested over $500 million in Solana tokens. Sell me all you want, Bankman-Fried told one skeptic in January 2021. Bankman-Fried's FTX held nearly $1.2 billion worth of the Solana token in June. When FTX collapsed, investors sold over $8 billion worth of the Solana token. Surprisingly, much of the crypto world has been relatively quiet and prices stable for the past few weeks. But not the Solana token. 2 of the biggest non-fungible token projects built on Solana just abandoned it on Christmas Day. The Solana token has fallen in value by over 30% in the past week. Ethereum has held pretty steady, falling by only 1.7% in the past week. And Bitcoin has only dropped 1.2%. The next biggest loser over the past week is Dogecoin, which is down 9%. Solana actually fell 5.8% in 1 hour of trading yesterday. During the crypto market's heyday in 2021, Solana had many public supporters. Developers raved about Solana's support for smart contracts. Smart contracts are pieces of code that execute pre-programmed directives. They have an innovative proof of history consensus mechanism that enables them to verify that a cryptocurrency transaction has occurred, and that tracks who owns what and how well the overall system is working. The system is based on a consensus between multiple record-keeping computers. Bitcoin also uses a proof-of-work mechanism. Ethereum and rival Solana use proof-of-stake. Proof-of-stake systems ask big users to offer up collateral or stake to become validators. Bitcoin relies on energy-intensive mining. Mining is basically solving for a cryptographic hash, which is a complex computational calculation. Proof-of-work validators verify transaction activity. And they maintain the blockchain's books, somewhat like a bank would. And this is done in exchange for a proportional cut of transaction fees. Solana's supposed differentiating factor was augmenting proof-of-stake with proof-of-history. That is the ability to prove that a particular transaction happened at a particular moment. Solana used its unique features to soar in value in 2021. One Solana token soared 12,000% in 2021 to $250 by November 2021. But Solana faced a boatload of problems even prior to the collapse of FTX. Some cryptocurrency experts challenge the protocol's claim to superior technology. Much of Solana's popularity was built around public excitement over NFTs. Solana's limitations started to become apparent earlier this year. A network outage took Solana offline for almost 24 hours in January. During the outage, Solana's token fell from $141 to $94. Solana also experienced a 7-hour-long outage in May. That was after NFT minting flooded validators and crashed the Solana network. A record-breaking 4 million transactions per second caused an outage of the Solana network. And that caused the price of the Solana token to fall 7%. In June, another outage of the Solana network caused a 12% drop. The hours of downtime came after validators stopped processing blocks. And that immobilized Solana's consensus mechanism, enforcing a restart of the network. The outages made it clear that a protocol that sought to establish itself as a stable, rapid platform. Solana definitely experienced growing pains on the public stage. Solana was first built in 2020. That makes it even younger than Ethereum. Technology challenges are pretty much par for the course in cryptocurrency. But Solana's association with FTX was pretty much the nail in the coffin. The SEC has called FTX brazen fraud. Bankman-Fried's use of customer money at FTX to fund everything imaginable. Trading and lending at his hedge fund, Alameda Research. And his lavish lifestyle in the Caribbean. These fraudulent abuses roiled the crypto markets. Bankman-Fried was released on a $250 million bond last week. And he is awaiting trial for fraud and other criminal charges in the Southern District of New York. Meanwhile, investor concerns continue to mount over crypto exchange Binance. Just a month after FTX declared bankruptcy, investors are nervous about Binance. Binance's native token, which is called BNB, has plummeted 15% in the past week. That includes a drop of over 6% in the past few days. Binance was the first outside investor in FTX. But Binance decided to sell out its equity position in FTX last year. Binance sold its stock in FTX for $2.1 billion. Binance CEO Changpeng Zhao has been trying to reassure investors. He dismissed concerns that Binance could have that money clawed back. But FTX is winding its way through bankruptcy court. Investors are concerned that Binance might not be able to handle a $2.1 billion demand. As you might expect, crypto company CEOs don't have the credibility among investors that they once had. If you follow this channel, you know that FTX then faced an immediate surge in withdrawal demands. And that was when Binance offered to rescue FTX by buying the company. Binance backed out of the deal because FTX had issues that Binance could not resolve. Like all of the major crypto companies, Binance developed its own currency, called BTB. The stunning collapse of FTX and Alameda Research blindsided basically everyone. It also took customers, venture capitalists and Wall Street analysts seeming by surprise. Both of Bankman-Fried's parents are established Stanford Law School professors. But Sam Bankman-Fried could face quite a number of potential charges. That includes both civil and criminal charges. There could also be private lawsuits from the list of millions of FTX creditors. Sam Bankman-Fried also founded crypto hedge fund Alameda Research. And Alameda Research allegedly commingled FTX customer funds with its own trading funds. That is the area of most interest to investigators in the bankruptcy court. So, it is fair to say that Sam Bankman-Fried actually controlled Alameda Research. And I think that he selected Caroline Ellison to be the CEO of Alameda Research just so that he could control the company. How could he not be aware of that state of the balance sheet of Alameda Research? After all, the two were not just personal friends, and maybe romantically involved with each other. But it has also been reported that they were actually living together in a penthouse in the Bahamas. Personally, I do not believe that any of the creditors will be made whole. In fact, I think that they will have lost everything. Bankman-Fried claimed he was unaware of the nature and extent of Alameda Research's exposure. Now, the holders of FTX stake are coming clearer. And, surprisingly, there are some pretty big names. But that was the subject of other videos on this channel, and maybe future videos. The crypto crash rages on. Cryptocurrency projects have collapsed and bankruptcies have occurred across the crypto industry. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.